Okay, okay, let's have this talk today. I'm going to be really very fast. So I promise we're going to talk about how I do manage my risk, right? So many people have been asking me, how do you manage your risk, right? Some say, do you take dynamic entries? Some say, do you just use your full position in one, right? So today I'm going to talk about how I do manage my risk in a trade. So now let's assume I am trading gold, right? And my lot size for gold is 5 lots, right? Now I use 5 lots for my trades. How am I going to manage that 5 lot, even if it's going on profit or on losses, right? So now how am I going to manage this particular lot size? So this is how I do mine. Now let's assume I have a trade running on gold, right? I open the 5 lots on gold and it's running nicely on profit. So how am I going to manage my trade? Now I always look at the market structure, right? I have seen my trade, I've seen the possibilities of where the market is headed at a particular time. So now I usually use the higher time frames to understand the overall market trend, right? So now based on the 4 hours time frame or the daily time frame, I was okay, gold is heading to the upside and I'm buying, right? Now I opened the 5 lots after considering what I've seen in the market before, and I took my trade based on the 30 minutes time frame, and I'm 20 pips, 15 to 20 pips in profits on the buys, right? Now what I do is, since the market structure is telling me that we are overall bullish for the day, now what I do is I close some part of my positions, right? I close either 50% or I close 60% of my position, and I'll allow the other one to run on break even, right? So doing so, I will gain more, and I've secured something initially, and I'm running on break even, right? So I'm no longer risking anything. I'm no longer risking anything at that point, but instead I've secured half of my position, and I'm expecting the market to really play out as I want, right? So if it comes back to hit my break even, right, I'm okay. But if we continue down to where I've seen that, okay, we are likely to retest this area based on the market structure of the higher time frames, right, then fine. Then secondly, how do I manage that same trade when it's going against me, right? Now I opened a buy based on the 30 minutes time frame, closing above area of rejections, right? Now if the trade starts to go against me, that is the point where I need to start looking to see, okay, how can I manage my losses, right? How can I lose lesser to what I actually expected to lose? If I was expecting to lose $500, how can I lose less than $500, right? So that is how I think. I was okay, I'll go to the smaller time frames, I'll go to the 15 minutes time frame, I will check, okay, is there any candle closing as a bearish candle, right? Is there any candle breaking the lows which they're not supposed to break? I'll close 50% at that point. I won't even think of it, I'll just close 50% of my position, because the market is not doing what I expect it to do. Instead, it's doing the opposite. So at that point, I should now be thinking, how can I do what? Lose lesser to what I actually wanted to lose at the initial time, right? So if I close with 50% of my positions, at that point I have reduced my risk level, right? Instead of losing 500, I can lose 200, I can lose 250, I can lose 300. As long as I'm saving something back to my pocket, that is very good for me. That is how I manage my risk. Then if eventually I don't hit my stop loss and the market structure is still looking bullish, it's still looking very nice for me to take my buys, if the market gets back to my entry point again, and I will now look at, okay, how can I give my trade a second chance? I can decide to actually add back my positions that I've closed initially. I'll add them back, expecting the market to continue in my direction at that point. Or sometimes, depending on the market structure, I might decide not to add it back. I'll just allow the one I have running already to continue running down to like my TP, because at that point I've held it for a long time. I will want to like see how can I even reduce the half that I've closed initially, right? So that is how I do mine. That's how I manage my risk. I don't take dynamic entries. I don't say they don't work, they work. The people actually use them, but for me, I go in full position because I've seen this happen several times in the market, and for me to see it happen again, I will surely go in with my full position. So if it's going against me, I'm managing my risk. If it's going in my favor, I'm also managing my risk at that point, because the moment you save money and you get money, that is what keeps you on in trading. So I will see you on the 15th January. We'll kick off our live trading London section 7:30 a.m. GMT. I'll see you live. Okay, so